If you run a business, chances are you're going to need to do a business tax return. As an accountant who works with 150 plus businesses every single year, I love talking about this stuff. Today I'm going to be talking about how you can maximize your business tax return. And by maximize your return, I don't necessarily mean increase a refund, because a lot of businesses end up owing tax. What I mean more so is optimizing the total amount of tax you had to pay. So the first one is structure. Now the structure of your business is really important and you need to get it right, and the actual choosing your structure is a whole nother topic. I've got lots of videos on my channel about that. But the structure may dictate a little bit about your claims. In general though, what is deductible to a sole trader is likely going to be deductible to a partnership or to a company. But understanding how those deductions work helps you better understand how your overall tax works. For instance, if you're taking a wage as a company, obviously this is going to be a deduction, and the super contributions are also going to be a deduction. Compared to, say, if you're a sole trader, you're not taking a wage, so you're not having deductions, but you're getting taxed on your profit instead. For instance, if you're a partnership, all the deductions are going to go into the partnership tax return, and then the profits are going to be split two ways. So understanding how your structure works is really important to being able to complete the return. Knowing that, if you're a partnership, trust, or company, you've got a separate tax return. If you're a sole trader, it's all going in your individual tax return. But also structure is something really important to think about going forward of how you can maximize your overall position. Like I said, go and check out some of the other videos I've got on my channel and make sure you get your structure right and professionally reviewed. The next one, it sounds really obvious, but it's understanding what you can claim and understanding what you can claim for your industry. Every industry is different, and you really want to make sure you're understanding what's claimable for you. Speak to other people in your industry. Ask them what they're claiming. Understand that their situation might be different to yours. Understand what is income to you. And this might sound a bit odd, but understanding your income leads to understanding your expenses, because expenses have to be related to income. So if you can understand what income you're going to be taxed on, you can understand what expenses might be deductible to you. And work with an agent who understands your industry. It's one of the key things that we try and work with as Rooshock Accounting is understanding the industries other people don't understand. If you're doing crypto trading as a business, what's deductible to you? If you're running an online reselling business, what's deductible to you? Maybe you're doing content creation, what is deductible to you? It's going to be different to all of those other industries and everything else out there. So you really understand industry first and then apply those particular rules to your personal business. You need to assess, have you actually spent the money? Do you have a record to show that you've spent the money? And was there a private portion? You need to tick those three boxes, understand them, and that is the key rules to finding out what's a deduction. And I did just talk about my business, Rooshock Accounting. Like I said at the start of the video, we work with over 150 different businesses every single year on this kind of stuff. So if you're looking for an accountant who understands your industry and wants to work with you to maximize your overall tax position, we'd love to hear from you. Reach out. All the links to our website is in the description to the videos. But for now, let's jump back into this video. The third one is using a business bank account. Now this isn't mandatory, but it makes life a lot easier. By having a separate business bank account, first of all, you can start to understand, have we actually got any money? Because you can look at your bank account as a starting point. But it also starts to group all your expenses into one spot. Therefore, you're not missing things. If you're paying things out of a business account, a credit card, a personal credit card, in cash, and your employees are paying expenses as well, it becomes very difficult to track. However, you can try and streamline this and get it into one or two sources that are just business related. You take out a wage or a drawings, depending on what your structure is. It makes life much easier. Like I said, it's not mandatory, but the bigger their business, the more likely it would be. And if you're using other structures outside of sole trader, it might become almost mandatory for you to be using that. It just makes life a lot easier. And I see my successful business clients are using separate business bank accounts from day one. You can then start to put in systems where you capture anything that is the exception to this. Maybe you did have to use a personal card because you didn't have your business card on you. Well, now it's just the exceptions rather than everything. This leads perfectly into using accounting software. This is, again, something that's going to make your life easier in the long run. The bigger the business, the more difficult the record keeping becomes. And the ATO understand this. The business record keeping for a $100,000 a year business looks very different to a $100 million a year business. But there's nothing stopping you as that $100,000 a year business from using software to help make your life easier and to hopefully maximize your return because you're capturing everything on the go. For instance, you can use something like Xero. I have some links in the description of this video. We can get some great discounts as well. But you can use this, link your bank feeds. Suddenly, now we don't have to do as much work. We're seeing all the transactions. We're capturing all our expenses. We can capture our cash expenses separately or our reimbursable expenses to our employees. All of a sudden, we've got a system where we're understanding what is deductible because we're getting it all the time directly into our accounting software. We can now start running reports to make better decisions about our business or to better understand our tax position. How much is our upcoming BAS going to be? What's our profit for the year? How much tax am I going to owe? you can start to understand and calculate all these things by having up-to-date data in your accounting software. This is all about overall optimization of money. So it goes beyond just tax, but you can start to make sure you're invoicing your customers and actually getting paid for them. All these different aspects of business are all about making you more money and making you more profits, and of course, optimizing what you're claiming from a tax point of view. The fifth one is understanding the difference between cash and accruals. You need to understand what is on a cash basis and what is on an accruals basis, and which one are you. So a cash basis means it's being treated when it happens as far as when it's spent or when it's received. So if you send out an invoice to customer and they pay you today, that is going to be on a cash basis recognized today. However, if you send that invoice out and you don't get paid for 3 weeks' time, you won't recognize it till 3 weeks' time. The same goes for expenses. If you spend money today and you use your card today and spend it, it's deductible today. However, if you receive an invoice and you don't pay it for a few weeks, it's not deductible until you pay it. So understanding this is really vital to understanding how it works from a profit point of view. Now, this might be different for your income tax as it is to your GST. So check what your GST registration is and chat to your tax agent about how you're treating things from an income tax point of view. And this will help you better understand when we're getting close to the end of financial years or the end of quarters, what is happening for these final invoices you're sending out or final invoices you're receiving. Is it worth you pushing and getting some invoices out now or delaying them? Or should you be trying to chase those invoices from suppliers and make sure you can claim them now? Or is it not going to make a difference? Should you be prepaying expenses or make sure you paid all your bills now? By understanding how you're being treated cash or accrual and how it actually works, this will really help you maximize your over position because you can start to do some proper business tax planning. At the start of this video, I mentioned business structures. And if you're wanting to know more about this topic, I actually have this video here where I go through all the different business structure options we have in Australia, how they work, and how you can determine what is best for you. I look forward to seeing you over there.